Disclaimer: the insights and opinions shared on this show are for educational and entertainment purposes only. Before making any financial decisions, we recommend consulting with a qualified professional to better understand your unique financial situation. Welcome to the Investors Playbook Show, where our mission is clear: empowerment through financial education. We firmly believe that financial freedom isn't a privilege, it's a right that's available to everybody. Each week, we dive deep into the world of finances, breaking down complex topics and making them accessible and actionable for everyone. As we grow this community, we invite you to join us on this journey. Why tune in? Because together, we're not just learning about wealth, we're building a movement, reshaping futures, and proving that with the right knowledge, financial success is within everyone's reach. It's time to get off the sidelines. Let's go.
Welcome to Investors Playbook, episode 32. I'm Cornell Rowan.
Deshaun Edwards. As you can see, we in person today. You feel me? My boy Cornell flew out here. The housewarming we had yesterday, man, it was a good time, bro.
It was a great time,
You
man.
enjoyed yourself?
I did, for sure. Hey, and congratulations, man. This is a huge accomplishment, man. I was really happy when I got the invite, and I had to come over and see. As y'all can see, the house is beautiful. They're doing great things, and I wish y'all the best, man.
Bro, I appreciate that, man, for real, bro. It means a lot, especially because, I mean, flying all the way from Georgia, bro, like, people drove up the street. You flew hundreds of miles, you feel me, for this.
Facts.
And, yeah, bro, I just really appreciate that for sure.
You already know, bro.
Yeah. But, man, look, as you all know, every episode we talk about the things we got coming up. Man, we get closer and closer to the book fair. I'm going to be in Atlanta in like a week.
That's like a week, bro.
It's like a week from now. April 20th, man, we doing a book fair. Well, we're attending a book fair where we are going to be promoting, of course, financial literacy, promoting the Investors Playbook, 6-step process to financial freedom. Hoping to just, have a real successful book fair. We want a lot of people to come and like really just get that knowledge, right? It is Financial Literacy Month. And I feel like that fits perfectly into us attending the book fair, promoting the book, telling people about financial literacy during the month of National Financial Literacy or Financial Literacy Education Month, however you are supposed to say it. But y'all get what I'm saying. So yeah, I think that's going to be definitely going to be a good time. And yeah, if you're in the Conyers area,
downtown Conyers, and usually they have a great turnout out there, man. So I'm actually really excited about how this is going to be, and we been thinking about some interactive things to do with the people that are down there. So if you're near Conyers, come out, come see us, and we would love to chat it up with you.
Exactly. So yeah, sure. But today, we want to talk about another important topic. As y'all know, April is Financial Literacy Month, but also it is the month that you have to or are supposed to file your taxes. All right, April 15th to be exact.
All right.
April 15th is the day that you are supposed to file your taxes. It is right around the corner. So yeah, we just, I mean, they give you a good bit of time. They have a lot of reminders. But if you have not heard or have not started, April 15th is the day that you have to have your taxes filed.
And really, man, taxes. The topic of tax is just really important because I know that everyone is aware that when you're purchasing something, you pay taxes. Then they are aware of taxes coming out of your check whenever you get paid. But people don't really understand how taxes work, and I've noticed this talking to a few people because there have been instances where I was talking to a friend and he was like, "Oh, I left out my DoorDash 1099 because it made my taxes go down." And I'm like,
it's not how it works.
It's not how it works. So people, like, as we mentioned in our earlier podcast, people feel like a W-2 is like this magic ticket that gives you money. But really, this is just a document that records how much you're paying in taxes throughout the year. If you're not paying enough in taxes, then of course you'll owe. If you're paying too much in taxes, you receive a tax refund. It's called a refund because this is money that you paid to them, and you are getting it back because of the overpayment.
Right. And I think that that is just one of those conversations that we need to have, especially amongst our people. We we see this tax refund as a blessing, but like Cornell just mentioned, it's literally the government saying you gave us too much money. Here is some of the money that you should have kept last year. We're giving it back to you. So understanding your expenses throughout the year, your what your income is, what your expenses are, all these things are very important. They have a lot of tools out there that exist that allow you to kind of make taxes easy if your taxes aren't complicated. But the moment you start to do things like, you start purchasing stocks, start selling stocks, you start purchasing assets, you start paying things like mortgage interest, it begins to get a lot more complicated. And even just you working multiple jobs, like you just mentioned, someone said, "Yeah, I'm gonna give this 1099, but I'm not gonna give this one." Like you can't just avoid paying the taxes that you owe, and it doesn't matter how many years pass. Like they eventually will figure it out, and they'll come for you. You have people who like didn't file taxes, like especially during 2020, 2021, because there was a lot of confusion, a lot of people getting free money, and they just avoided it altogether, who are now having to pay the piper for decisions that they made years ago. So we want to just bring this topic up. It's extremely important. Again, April 15th is the date, but at the same time, they do give you grace, right? You are allowed to put an extension on your on filing your taxes, um, and you have to just make sure you do that through the correct channels, right? I think the extension date is October 15th.
Right.
Yeah. So if you aren't really prepared to file your taxes right now, in order to avoid those fees that come with you not paying or not filing your taxes on time, extend the date. You could do that up until the 15th of April. So, and I feel like you can extend after, but you still might get hit with a fine. So, if you still have time to put in the right request so that you can get that extension done, and it's super easy. It's a lot easier than trying to rush, do all your taxes, make incorrections, and have to go back and change your taxes. Instead, just give yourself a bit more time by completing the correct form. I might be saying it wrong, but Form 4868 or Form 4868, I'm not sure which one, how they say it, but that's the form you need to look into when it comes to extending and not needing to, file on the 15th, but instead October 15th, 15th of April, and instead October 15th. So,
And also, when it comes to taxes, you know how we kind of just wait into, well, I can't say we, but most people just wait until tax season, and then they're like, okay, let me see how my taxes went, and then they file their taxes and they pay what they paid, so or they get what they get. So there's actually a strategy to tax, and this is what the wealthy use, like how these millionaires are able to pay uh, smaller
basically, yeah,
amounts
minuscule amount of taxes.
smaller amounts in taxes than us. So when it comes to that, you have to be intentional. You have to strategize.
Absolutely.
Right
Not
from the
wait
beginning
until
of the year.
April 1st to be like, oh crap, I got to get all my tax documents. Like literally January of the year before.
From January to December, you should be thinking about what's going to be written off on your taxes. Are you going to be itemizing? Are you going to utilize standard deduction? So these are things that need to be in mind, and this is why CPAs
Oh yeah.
are so important, especially when you have when you're starting to create more wealth, when you have more income, and you're able to do more. So yeah, so you have deductions and you have credits. All right, so deductions actually reduce your taxable income, which creates less taxes for you. So that's why people are writing off their expenses, like their student loan interest, or if you have an LLC, you're writing off your what you had to put into like a rental property or something like that. So this is helping your taxes, and at the end of the day, you're saving more money when it comes to tax season.
Yep, exactly. So, like you just mentioned, they have itemized deductions, which is all the things you just mentioned, right? Like being very strategic throughout the year, knowing that this is going to be a business expense. This is going to add up to more than what the standard deduction is, which everybody has access to, right? Standard deduction is $14,600. And if your itemized deductions don't equal 14,600, it's best to just go with the standard deduction. It wouldn't make sense to make itemizations that don't at least equal up to what the standard deduction is granting you. But once you start to get past that, right? Once you start to spend more money than the 14,600, whether it be like you said on all these business expenses, um, that's when you want to start itemizing. That's when you want to start making sure that the money that you have spent or the deductions that you can claim are going to give you a are going to decrease your income even more than just 14,600. But again, that is you being intentional throughout the year, and not. I mean, by the time January, February come, it's no like everything's already done. Like whatever you spent, let's say for example, 2023, you have to go back and look at all of those expenses and see if you have passed the standard deduction. But again, people sometimes wait till the next year to start figuring out taxes. But the reality is, like, we should have been planning now, right? Or even January of this year on how we're going to prepare 2024 taxes come 2025. That's the best way to do it, right? Just being intentional, strategic, knowing what deduction you're going to take, whether it be standard, and if it is itemized, then figure out how much money you're going to be spending, whether it's through your business, through charitable donations, because a lot of these items or a lot of these expenses can be itemized, but of course there are certain ones that cannot, like personal things you can't itemize. You taking a trip to like going on vacation, right? There are certain things that you just aren't going to be able to itemize because unless it falls under a business expense or one of the other categories that the government has deemed something that you can write off, you aren't going to be able to just claim all these deductions. So that also goes into the being strategic on how you're spending your money, making sure you're understanding if you are using a personal card, but it's for a business expense, making sure that that's categorized a certain way. I personally just like to use my business card for all my business expenses. Um, Sometimes that's not always the case though. So you just have to be mindful of what you're using to spend the money and then what you're spending the money on, making sure you're keeping track of receipts. And there are a ton of apps that allow you to kind of keep this running track of all the expenses that you're having throughout the year. So that way, when it does come April, you're able to just kind of easily print that out and see it. You want to say something, bro?
I mean, I was gonna move on to the next topic.
Yes.
So, just like there are deductions, there are also tax credits. So, unlike deductions, so yeah, deductions they reduce your taxable income. So, let's say you're able to deduct $2,000. That doesn't mean that $2,000 is going towards your taxes. It's basically saying that that's $2,000 that cannot be taxed.
Mhm.
So it might save you depending on your tax bracket, of course. But let's say that it saves you 20% on $1,000. Basically, you're saving 200, not that full $1,000. Your income was just deducted by $1,000.
Mhm.
So also we have tax credits. So tax credits directly reduce the tax liability. So if you get a tax credit of $2,000, that means your taxes are reduced by $2,000. So there's a huge difference between deductions and tax credits.
Yes. Yep. No, that's good because I mean, even just understanding the differences between those, right? You don't write off a tax credit. That is like in the word, it's a credit that goes toward um, the end goal of what your taxes will be. So yeah, I think it's important to make sure we make that be known too. But speaking of tax credits, speaking of deductions, speaking of businesses, we know that April 15th is the day for personal filing needing to be done. For S corps, for partnerships, it's we passed that date. It's March 15th. Um, so if you do have a LLC, if you do have a partnership, if you do have a S corp, the expected or the date that you were supposed to file your business taxes was March 15th. Of course, just like with your personal, you could have filed for an extension. But if you do have an LLC and you have not filed for taxes and you have not filed for an extension, it's probably best to either speak with someone who is more well versed on tax preparation to see what you can do moving forward. But yeah, the March 15th date has passed, but that is supposed to be the day in which you are needing to file your business taxes, partnership taxes, anything like that. And C Corp, I think, is the same as personal, which is April 15th. But all those have extension dates. Um, it's just a matter of you making sure that you put or you filed for an extension before that date came. So hopefully, if you do have an LLC, S corp, you either filed your taxes or you filed for an extension. But if not, yeah, I definitely holler at someone who is, you know, experienced with dealing with things like that, so you can avoid hefty fees. I want to say that the fees build, so just get on it as soon as possible to make sure that you aren't falling too far behind when it comes to filing taxes. But yeah.
And with tax code, tax code is constantly changing. So just because something was one way 5 years ago doesn't mean that it's going to be the same here. So it's important to speak with a professional, regularly, or at least keep keep in intact with what's going on the IRS website, what codes are changing, what amounts are changing, like with standard deduction, what you can get tax credits on, because that's important, because a lot of people don't know that there's a tax credit for if you're going to college. They actually give you a form. It's a 1098-T, and when you turn in that form, you can get up to $2,000 credit. So certain things like that is important, and at this point, not knowing isn't an excuse, because we have so much information accessible to us. We have the internet, we have podcasts like this one, where we're sharing knowledge. So it just be intentional, and just being intentional in different areas of your life can change your life holistically. So just be intentional.
Facts. Now, of course, on Investors Playbook, we gotta talk about taxing on stock market gains
Yeah.
and how. I mean, it's a little unfair when you really think about it. And no, in fact, it's a lot unfair. So, how taxes go? As you know, you get taxed on the income that you make, and in stocks, some people can make a lot of money in a year on stock market gains, whether they're trading, doing options, trading Bitcoin, whatever the case may be, right? You can make a decent amount of money, and you will get taxed on all of that. Like every penny that you make as far as gains, that you make within that year can be will be taxed.
Will be taxed.
Now, if we reverse that story and say you didn't do so well in the stock market, you traded, you tried to make some plays and it didn't work out for you, and you lose a decent amount of money, right? Let's say, for example, you lost $10,000 in the stock market in 2023. Now, initially, I thought, right, I took a loss. Cool. I'm gonna make sure that I write it off on my taxes. That's not true. You are only able to write up to what, $3,000.
Yes.
It doesn't matter how much money you lose in the stock market or how high that number goes. The amount of money you can write off as far as stock market losses cannot exceed $3,000. Um, but you can make tons of money and get taxed on all of it. And I'm like, that's
it's really ridiculous, man.
Yeah.
Because if you think about $3,000, not a lot of money.
No.
It's not a lot of money, and it's actually a strategy to where, because anything that you're gaining in the stock market is unrealized.
Yeah.
So that means you don't have to pay taxes on it until you sell. So of course, if these stocks are still making money for me, I'm not selling those. So at the end of the year, I'll look for things that are down, like that I'm ready to give up, and it's like, okay, because I can write that off.
Yeah.
Okay, so I might sell Tesla because I'm down an extreme amount and I'm giving up on that. So I'll take that money out and I'll put it somewhere else. So I've claimed that loss. So it doesn't mean that I've lost money the entire year. It just means that I sold my down positions. So that's a misconception also. Just because someone is down on paper, when their tax form comes out, that doesn't mean that they lost money that year holistically in the stock market.
Right.
But it with that information that you can only write off $3,000, which is crazy. Um, yeah, you really have to be strategic because you don't want to take too many losses.
Hmm.
You don't want to sell too many of your losses at that point because you're only going to be able to write off 3,000.
Yeah.
And I feel like it's really crazy because your tax return is supposed to state how much you made, like net.
Hmm.
Like that's supposed to have your whatever you made and whatever you lost, and it's your net income.
Yep. Doesn't count for stocks.
But it doesn't count with stocks. So
Doesn't
let's
count.
say I made $1 million, lost 500,000. Like they're still gonna treat me like I made nine hundred
Yeah.
and 97,000.
That that's wild, man.
That's
Wild.
crazy.
It's especially important for people who trade, who are constantly buying and selling throughout the year, because, like you said, when you put money into when you buy shares, right? It's unrealized. They're not gonna even look at that until you decide to do something with it. Traders are constantly buying and selling things every day, pretty much, right? Like
Yeah.
constantly. So those losses are, you quickly realize your losses and your gains as a trader a lot faster. Well, a lot faster than you would if you were just an investor and only buying and holding. Um, so yeah, it's just important to, like you said, be real strategic when it comes to knowing that the most you can write off in your losses is $3,000. Don't expect a down year to offset your taxes because it will not.
It's
Like,
not gonna help.
it will not help you. Don't be like, well, I'm gonna just write off all these losses that I just took. Nah, you can write off $3,000, and that's it.
Then it's such a low number. I guess they're doing it on purpose because they feel like if you have money to invest. But the thing is, like every everybody has the money to invest, and I
Mhm.
feel like I could imagine, like I would get it if it was like a much higher number. Then
Yeah,
it's like okay, if you lose $100,000 in a year,
right.
they got that money.
Cap
Okay,
it at something that makes more sense though. Three
three
thousand.
thousand dollars. That's somebody's rent, bro.
That
Like
doesn't make sense. Yeah. So, but that's the game we got to play, right? So if you are wanting to use stocks or any of the securities as a write off, just make sure that you are aware that $3,000 is the most you're going to be able to write off. That because that was a shocker to me,
and
man.
that goes for crypto too.
Yeah. Yep.
It definitely took me by surprise because
Hmm.
I think both of us have had a year where we we took our losses and we were prepared to to reap the benefits. I hate to say it like that, to
Nah,
reap the
for real.
benefits of those
Yeah,
losses to
it's
write them
like,
off in deduction. And it's like, nope,
nah, bro. You thought.
that's all you get.
You
It's like,
thought. But nah, man. Really, like the main things and the main takeaways are when you talk about taxes, it can sound very complicated. But like with most things, if you stay organized throughout the year, if you're aware of your income, you keep track of your expenses, you don't have to scramble when it comes to paying your tax or when it comes to filing your taxes. Starting literally now, like today, if you have not started planning your taxes for 2024, you can start doing that. Go back to January, see what your expenses are looking like, and then plan ahead, right? Um, if you are one of those high income earners and you want to offset your taxes, there are a lot of ways to do it. You can do charitable donations. Um, you can look into purchasing different assets that allow you to kind of write off things like your mortgage interest rate. There's a lot of, and then you can even start a business. Have some business expenses. Those can go towards decreasing your income overall. So there's a lot of ways to benefit from the the deductions that there are. As far as itemizing, there are a lot of ways to benefit from the itemized deductions if you are strategic throughout the year. So I think staying organized is just like the main thing. Knowing what the plan is from the beginning, and then just working and executing based on those steps. You know
right.
what
So basically, based on this information, now that you have a lead, go be intentional.
Yep.
Go plan those taxes. Have a tax strategy throughout the year so that you can excel when it comes to tax season. You're not just getting this check and you're saying, "Oh, I got free money. Let me go spend it on a trip."
Mm-hmm.
You see what I'm saying? It's not free money. You're spending your money. Don't let them fool you.
Yes.
So,
Yeah. And then at the end of the day, man, seek help if you really are like not sure what to do with your taxes, right? I feel like you paying for help will save you more money in the long run than you trying to figure it out on your own. and possibly losing out on some of the tax credits that we talked about earlier. Deciding to do standard deduction instead of itemized when you could have itemized and decreased your income a lot more. So at the end of the day, man, like there are people out here who literally this is their job to help you with your taxes.
And also, I see this a lot too, so I like to add, if you only have a W-2, stop going to these people and letting them charge you $300 to file your W-2. Man, just get TurboTax, put your little W-2 in there,
Yeah.
and pay or get back whatever you need,
Yeah.
because you have what you have. If somebody's getting you $10,000, your taxes are your taxes.
Yeah.
Just because a certain people, just because a certain person does it, and you get you feel like you get more from them, that means something shady's going on. Because at the end of the day, your taxes are your taxes. If it's not right, it shouldn't be on there. So just keep that in mind.
Yeah. Any promises, like if it's simple, like you said, bro, you could just use one of the apps. TurboTax is great.
I love TurboTax.
If your taxes are mad simple, there's no need to go above and beyond. And honestly, add things to your taxes, making it more complicated and possibly false, then needs to be on there because they gonna get their money, right? Like it might not be today, it might not be next year, but they will go back and make sure that everything, all the T's are crossed and all the I's are dotted. So yeah, man, just make sure that you aren't getting duped. Yeah, staying organized, understanding what your deductions could possibly be, understanding your tax credits, seeking out help if you need it. But yeah, really, everyone's situation is going to be different. But the most important thing is make sure that you file. Like, there's no need to not file your taxes. Don't think you can just hide from it. You can't run from it. We here. We in the U.S. You got to pay your taxes or file for your taxes. So, yeah, man.
All right, so another one in the books. As always, you can find us at Investors Playbook LLC on all social media platforms and our website, www.investorsplaybookllc.com.
Yes, sir. All right, man. Catch y'all next week.
All right, we appreciate y'all.
Sounds good.
Later, peace.